Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. I just lost $112 instead of $1,200, and I'll talk about that in just a minute. But this is fall in New England. We're just about at prime leaf season, and it's just like a regular fall up here. It's a rainy, cold, meaning, you know, it's 48 degrees, which is not cold, but after coming out of spring and summer and a warm fall, 48 is pretty chilly. Got the heat on in the house, and as you can see, it's really nice. People come from all over the world, and they have. We've been traffic jams. This is fall leaf season in the Lakes region in New Hampshire, and so people are going through this region and heading a little further north into the White Mountain National Forest, and that's going to be really nice up there. We just got back from a trip around the Sunapee area region, and they had their full leaf just a few days ago, and now we're starting to get it. Anyway, that's the travelogue for the day. How did I lose $112? I think I better go inside because I was starting to get rained upon, so come on in. I'm writing up the shopping list. I'm cooking what am I cooking here tonight? A Mediterranean chicken recipe over couscous and a bottle of wine. That's what we're having tonight. And so I'm just getting into the day. It's actually, when I'm filming this, it's Columbus Day weekend. So that's the reason for the difference in the video. It's a holiday. Not that it matters when you're retired, but that's just the way it is. Got to celebrate. Okay, so I got my coffee. That's good. Chilly day. So how did I lose $112 instead of losing $1,200, and why is that significant in a Forex trading video? When you're trading larger lot size positions, I've said time and time again, you can't go in with your full load. If you're trading 10, 20 lots, you don't want to go in at the opening with 10 or 20 lots. Whatever your max capable trading bank is, you're not going to go in off the gun with that. Because if you're an active trader, which we are as day traders, within 200 or 300 trades, I forget exactly what the statistics are, but within 200 or 300 trades, you stand a significant, as a 60-40 trader, there's a 34% chance you're going to hit 6 losers in a row. Yeah, there's 34% chance you're going to hit 6 winners in a row, but you're going to jump up and down and be real happy with the 6 winners. But if you hit the 6 losers, not so happy. If you're trading a 10 lot at $10 a pip and you drop $1,000 6 times, that's a lot of money. So when you're trading with smaller lot sizes, you can't trade and open, like if you're trading with a 3 lot, you can't open with a 1 and stage in, because you're losing the power of your purchasing power. You've only got three fulls that you can put on. So you better take full advantage of those 3 lots and put them on and really understand your entry analysis theory so you don't get popped out so many times. If you get popped out 6 times with a 3 lot, you're just going to have to eat that, because your metrics are being built in all out trading. So as a 60-40 trader, you lose 4 times, 5 times, 6 times in a row. You'll do that 6 times in a row in 200 trades. So you got plenty of time to make that up and balance with a 60-40 ratio. So you lose 10 pips 4 times, and you gain 10, 12, 15 pips 6 times, and you're ahead of the game. That's the trading game. If you're a 70-30 trader, your chances of hitting 6 losses in 300 trades are about 8%. So even as a 70-30 trader, you have a fairly high statistical likelihood that you're going to get creamed. Better that you get creamed with a 3 lot on a 60-40 then you get creamed 6 times on a 10 or 20 lot. When you are trading the larger lot size positions, you dribble in. Maybe you'll come in with, let's say you're trading a 10 lot, so you come in with 3 lots, and you fart around with that for a while. If it goes against you, you lose 300 bucks, right? You're trading at 30 bucks a pip, lose 10 pips, 300 bucks. Rather than if you've got 15 lots behind you or something, or 10 lots, you're going to lose quite a bit more. You'll lose 3,000. But when you're using those larger lot sizes, by trading with the smaller lot sizes, you may be taking, let's say that $30 a pip position times 10 pips, all right, $300. You're probing at the market, and you're losing that because you're trying to get that initial trade in at the bottom of the movement. Let's say you're going long. If you wait too long to try that 3 lots, that's taking up maybe 7 or 8 pips, where now you put that 3 lots in, you've got 7 more lots to put in. How far do you think that price is going to go? Is it going to go? You've gone up 10 pips, you add your first 3, and what's it going to go? Is it going to go another 20 pips or something like that, so you can scrape 15 and get an average of you know, whatever you're adding in your other 7 lots. That becomes dicey. You're not really working with the power of the day trading methodology. So you dribble in those 3 lots, and you preload your position. You're not staging in. You're doing what I call building the position. And there's generally 2 builds before you start staging. And I have rules, and I've taught in my coursework and stuff. There's, well, in the course document, there's about 40 pages talking about trading large lot size positions and how you stage and build and all that other kind of crap. That's not the purpose of this video. The purpose of the video is to say, when you're trading larger lot size positions, that's when you want to break your position up and go in light and go in early. And then you're going to lose. You don't necessarily have to take a 10 pip loss on that probing position that you have with the 3 lots or something. The probe position that I had, I just took I think it was a 3 pip loss, and I got out because it wasn't moving in the direction that I needed it to move in. So I got out. There are other reasons for getting out with 3 pips as opposed to waiting for 5 or 10, because I'm sort of at a boundary condition level, and I'm not real sure that price is really going to go in that direction. So I may decide to flip around, and instead of doing a short today, I may turn it around and go long if I keep bumping into that position. But if that position breaks through, it's going to go like shit through a goose on a short side. So I'm going to be there for that, and I got to probe with it, right? So that's what we're doing. We're probing, and we're willing to probe 2 or 3 times. It depends on your bank size, how many times you want to fart around with that. Because not only are you probing and losing, but if you run into that statistical 6 losses, that could turn into 10 losses in a row, and you'd be in dire condition. So you use that small position to probe in and establish your position when that thing kicks and starts to move in your direction. You can start feeling pretty good, like trading on a 5-minute chart with a 5-period ATR on one of the major pairs, when that thing moves 3 or 4 pips in your favor. Now you're starting to see some solidarity. Would you add to that position at that 3 to 5 pip level? Maybe. And again, there are probably 6 or so branches of thought that go at that point. And so we cover that stuff in consulting and stuff. I mean, look, if you're just trying to learn how to trade, this stuff isn't applicable to you because you're trading mini lots or a 3 full lot, 5 full lot position. You're all in, all out. So none of this stuff makes any difference. I work with serious traders that have traded in a live market and are not just farting around trading 1 lot or 2 lots and thinking they're going to trade at 500 to 1 and run that to $30,000 or replacing their job income. There's serious folks trading at reasonable leverage that are looking at replacing their job income with good risk management, but they don't understand how to stage the rules together. That's who I'm working with. That's who these videos are aimed at. So if you're not in that position yet and you're watching these videos, this is what you're going to need to learn as you move forward. And if you don't have somebody that understands this stuff and is presenting it, you're going to run into trouble. So I would suggest that you send me an email and find out what I've got to offer as far as how I might be able to help you. A lot of the folks that contact me, I tell them I can't help you because you're either over-enthusiastic about trading high leverage, or you think you're going to run your $10,000 account to $100,000 a year, or whatever it is that you're consuming in the quote education that's out there. It's not education, it's entertainment. Some guy got real lucky, he's trading a large account and he's making a lot of money. That's very entertaining, but he doesn't know how to teach that to you, nor should you even attempt it if he could teach it to you, because you wouldn't be able to do it because you don't have the experience. And just because you sit down and somebody shows you where to put your fingers on a keyboard to play piano, it doesn't mean you can play piano. It means you can mimic what somebody else did. If that somebody else gets up from the table and walks away, you can't do anything except what he just played. But he might have taught you a folk song. But now you're in a crowd that doesn't like folk music. They want you to play jazz. Well, you're not going to be able to do that because you don't study music. I mean, Jesus, I'm trying to teach you what an educational process is instead of just closing out the video. If you're trading with larger lot size positions, and I haven't defined that really, but 8 to 10 lots, something like that, then you're going to want to split your trade up into a probing build thing before you start to add into that position as it moves in the direction that you were hoping that it was going to move into. And that's really all it is. It's a hope. It's a probabilistic estimation of what you think should happen, but that probabilistic estimation should be based on solid conditions. So if you have a rule that says when the short MA crosses the long MA, that's the system, that's not a rule. You build rules with conditions that satisfy that rule or negate the validity of the premise that the rule is there to prove or disprove. And so it's important that you understand that difference, and that if you have larger lot size, you start with small lots. If you lose, that's fine. You're probing the market. If it starts to go in your favor, maybe you got a hold of something. You got to wait for a while, and then you can start adding into the position and get the number of pips that are possible. I mean, if you're trading on a 5-minute chart and you're looking to make 50 pips a day, you're delusional. So you have to fit all this stuff together within the playing field that you're doing. If you're playing basketball, you can't go outside the court lines. You have to stay within the boundary conditions of the game that you're playing. So you have to understand that game board, and then how to implement the number of lots that you have into that game so that you're successful. So you lose many times with the small probing, and then when you win with your whole position. In other words, you might lose 3 or 4 times with those 3 lots, but then when you win, you're going to add in as you go, and the win will be based on 10 lots or 20 lots or whatever it is that you've got going. You see? So the math, it's mathematical. So you have to understand how to put this stuff into proportion, right? Okay. Hopefully that helped, and I got to get out and go to the store, and I got to get there before it starts raining because I don't want to get wet. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.